Good afternoon. I'm glad everybody could join us today. We're going to go ahead and get started. We're going to talk about something that we all live through all the time is catastrophic events. And it's amazing how much of the country is affected by these things. We are going to spend most of the time talking about the catastrophic wind events of the Southeast, but I will touch also on floods. I will touch on earthquake, and we will touch on brush fires. Those are kind of the major catastrophic events that affect builders risk insurance. What we're going to do is run through the presentation and then we'll open it up for questions at the end. We're going to go through this pretty quickly, but it is something I think that for most of you that you live through on a yearly basis, annual basis. So let's go ahead and get started. Builders risk webinar, understanding builders risk capacity in catastrophic regions. Wind. So what we're really going to talk about, when I say wind, it's mainly the eastern coast of the United States and the Gulf Coast. So the traditional southeast is North Carolina to Texas. So that's where the tropical storms hit. But in the last number of years, the northeastern United States has been impacted by some very large catastrophic wind events. So we're going to talk about that a little bit. And I guess we'll throw wind in there in the Midwest. Because the reinsurers are telling me the convective wind currents have changed in the last decade or so, and they continue to predict more and more the frequency and severity of tornadoes in the Midwest. We'll say, when I say Midwest, Kansas, all the way north, all the way over to Kentucky, and even in northern Alabama. So we'll touch a little bit on those too. And what we're going to talk about from the insurance perspective is just the marketplace. The fact that maybe traditionally most of this was written in the E&S market by non-admitted carriers, and it still is, but there's an awful lot of admitted players now. And I'm not going to really get into the benefit of one over the other. I just think as agents, you should know the financial stability of your carriers and also the claim handling expertise, I think, is important too. And then the last thing, we will touch a little bit on the wind pool. Most of you know that the government sponsored places where historically this coverage was written for the wind. It still is, a lot of the business is written there, but we will talk about the standard market and other carriers that are writing business that is actually eligible for the wind pool. So we'll cover all those topics as we get into it. So let's talk about, from an agent's perspective, what you should ask. I think that's what's important. So first of all, every underwriting carrier that writes business in these areas and writes these perils has their own set of guidelines. So, I mean, I've been doing this a long time, and I've seen carriers that even define what is the coastline. Is it high tide, low tide? Is it tidal areas? Is it only the Gulf or the ocean? So once again, I'm not going to really sit there and tell you that one's better than the other. I'm just going to say, for the markets that you're using, make sure you have a clear understanding of what they mean by what are their guidelines. We have something called mandatory wind deductibles. Most all carriers have those. We're going to spend a lot of time on that because that's critical to understanding this. But also just to understanding how they define what is tier 1. We all think we know it, but every company has a different definition of it. Once again, elevated structures. We're seeing more and more residential and even commercial structures being elevated. That presents a problem from a builder's risk standpoint. It increases the exposure due to collapse and various other things. So just something you got to think about. So what is the maximum amount available for a project? A lot of times companies will only write so much of a given peril like wind. You might have to buy an excess wind policy. You just need to know, once again, you get into that world, it's all different too. A lot of carriers, I always call it buckets of capacity, but carriers have only an appetite for so much risk in a given area. So maybe you're writing a lot of business with a carrier, and then midstream they're going to call you and say, our bucket's filled up, we cannot write any more business. So in the back of your mind, you should always be thinking about that. Make sure that, it probably makes sense to have multiple carriers in your given area if you're writing in these areas. Renewal extension options. This is critical to understanding this. Let's say we write a 12-month policy and it's a $5 million project. So at the end of 12 months, it's 75% complete. Now you got to go back to the carrier and ask for an extension. Well, maybe that extension's bucket is full, the capacity's full, or maybe the carrier decides I'm going to raise the rate, increase the deductible, because that extension is theoretically a new policy. It's a new, it's not a new policy, but they can do that. They have their rights to do that. So you need to understand the underwriting methodology that a carrier uses. So just be aware of that on these extensions. Wind deductibles. I get asked this question all the time. Put it this way, carriers in the past, when a storm would hit, they would, a lot of the exposures, a lot of the claims they would pay would be small claims. So they decided, so maybe we'll start having use of wind deductibles. So a number of years ago, they started using them, and now we see them all over the place. We see named storm deductibles, full wind and hail deductibles, flat deductibles, percentage wind deductibles. We have ISO wind deductibles. We have AAIS wind deductibles. We have their proprietary wording of carriers with their own wind deductible forms. I've even seen things, you think of a named storm. Well, how do you define a named storm? Carriers do that differently. So I guess the message of this is be very, very careful and read the form very carefully. And if you have any questions or concerns, by all means, pick up the phone and call your underwriter. Make sure they explain it to you, because it's very different. We get asked this question a lot too. So what is the proximate cause of the loss? Is it wind? Is it wind-driven water, wind-driven rain? Was it flood? Was it storm surge? In the event of these catastrophic events on the coast, it gets kind of murky. So I guess it's better to have this conversation with your underwriting carrier before the storm happens. And I think that's the other thing. If I give you any words of wisdom today, is these are things you should be having discussions with your underwriters today. The wind season starts in a few months, so maybe we work it out so we understand what's going on before not, when the storm's brewing offshore, then you start asking these questions. I think we need to ask. And then things change all the time, so keep in mind. We see a lot of carriers that will exclude wind-driven rain. We see a lot of carriers that exclude storm surge. To just be, once again, very, carriers vary dramatically. The other thing is flood. Obviously in coastal areas, flood is very closely tied to these events. I'm not going to go into a lot of detail on the flood, but I will say I've seen the definition of flood very different on carriers' forms. The flood exclusions are worded very differently. So make sure you read that carefully. Yes. Best advice I can give you. Earthquake. So we think of earthquake and we think of California. That is probably the no pun intended, but that's the primary area. But we have earthquake prone areas all over the West Coast. And as this screen says too, we even have some faults in the Midwest, in the St. Louis area, Memphis area. And then we also have a pretty good fault in the Charleston, South Carolina area. So what I'm saying on earthquake is also the other thing is, make sure you find out, is it available in this area? Does the insured want earthquake coverage? You got to sit down and talk to them, explain to them the exclusion on the policy and what is covered and what's not covered. Then the next thing is the easiest thing is to get the carrier that's writing the other perils to write the earthquake. Sometimes you might have to go to the specialty market and write earthquake separately. What you need to do is talk to your carriers, make sure that wherever the risk is located, what is the earthquake zone there? Come to an agreement on that. The limits, there's all kinds of different limits you can write the earthquake for. So work that out. Most carriers, some people will write full limits on the project. Some are limited based on the zone. The earthquake deductible, I've seen many, many different forms of deductibles on the earthquake. So make sure you understand that. And the other question we get is the waiting period. Seen it 72 hours and higher. So I would say understand the waiting period on these earthquake deductibles. And I have seen, like, especially in California, where the specialty carriers do a very good job on writing earthquake. So in an area like that, it probably does make sense to go ahead and write the policy with a standard market and place the earthquake with a specialty carrier. That just seems to be, they know what they're doing out there. Anyway, that would be good sound advice. Brush fires. We went through a little brush fire this year in California once again, and it's a whole unique exposure in that. So we put together a few things here of what you'd want to see what you want to ask your carrier on that. First of all, we all know what the ISO public protection class is. So it becomes critical in a brush fire area, because if you think about it, what's the most important thing when there's a brush fire is where are you going to get the water to put it out, protect the property. I think the Northern California experienced that with the vineyards. It was interesting that the surrounding areas were decimated, but the vineyards had little or no damage at all. That's because of their irrigation. So protected the grapes fine, just not the buildings around the grapes. How's that? Distance to the responding fire station. Some of this would be PC 9 and 10, so there are differences in these areas. So that's why we asked the question. So find out. Once again, there's differences in the 9s and 10s. There's volunteer fire departments that are better than some of the standard fire departments. So just keep that in mind. Once again, on the fire hydrants, a lot of times we have new subdivisions being built. So they put in the fire hydrants, but they don't have any water supply yet. Doesn't do us much good if there's no water. And then the other thing is we see a lot of these things in the brush fire areas being on this, being built up high in mountains or on inclined areas. So then we say, all right, how are they going to get the water? Do they have a pumper truck? Can they actually get to the source of water? And the next thing you think about it in the winter months, sometimes the source of water is frozen. So it's kind of hard to pump ice. People forget some of these things. And there's a lot of online resources, especially for the brush fire. If you want to go to calfire.com, it'll give you all the brush fire areas. Companies have their own zones of hazards for brush fires, but CAL FIRE does a really good job of telling you where the active fires are, how big they are, the life, how long they've been burning, how many people are working on it. There's a lot of information out there on this. And I will say that also for the flood and the quake and all that, there's an awful lot of information online. So if you're running business in these areas, education has been key. So that was kind of just very briefly touching on some of the things we think about in builder's risk as far as, I didn't really touch much on capacity, but I do want to say that's really what it all comes down to is every market has their own appetite. It does ebb and flow year to year. Just in general, I'm seeing a little tightening in the wind-driven areas this year. I'm seeing some tightening on capacity for frame construction. We're seeing the deductibles going up a little bit, seeing the rates going up a little bit, and even less players in this market. So the other advice I would give all of you is maybe start shopping these things a little, as soon as you become aware of it. We know in builder's risks, it's kind of like the closing is tomorrow. I need coverage right away. But if you can kind of secure some of your markets early, I think that would be a good thing for you to do. Find out who wants to write the business and build a relationship with them now. Don't wait till June and then try to build that relationship. So let's talk. I didn't touch really. One thing I want to touch on is the coastline. So I've seen some markets that define their version of the coastline is tidal water. So think of something like Chesapeake Bay in Virginia. You could literally be 150 miles inland and it's still tidal. So they're going to measure their distance to the coast from that tidal area, which could be 150 miles inland. Other carriers will define what I call the true coastline, which means it doesn't include the bay. It only includes, the Atlantic Ocean or the Gulf of Mexico. Another example would be Tampa Bay. Some companies define tidal as all the way up Tampa Bay, which is a long ways from the Gulf Coast, from the actual Gulf of Mexico. So you need to understand that, talk to your underwriting carriers and get their definition of this. I've seen some markets that say if it's eligible for a wind pool, then we will not write the wind. So, and the wind pools vary state to state. Just about any coastal state does have a wind pool today, even the northern states. So I think if you're going to be writing in those areas, you need to do a little research and find out what the wind pool eligibility is in your given area. We've seen a lot of state wind pools that will not write builder's risk at all. So if you can't talk to standard marketing, then you're going to have to go to a wholesaler and maybe do it on the E&S paper. That's the only market that you could find. So I do see that happen a lot. So just in closing, once again, just to run through this pretty quickly, this will all be online too, this presentation, in case you want to go back and refer to it. Financial stability, whether it's standard or non-standard, I would definitely check the financial stability of the carrier before I get involved with them. I would read and understand the coverage form. Don't assume everybody's the same. They're all over the place. I would get a little claims processing. I would understand how they process claims and what's their track record as far as handling these claims. Because when you have a catastrophic event, that's when it becomes imperative. Some of us have lived through these events, and how you handle the claims is your reputation, not only as the carrier, but also as the agent. Underwriting guidelines, get an understanding of them today for what they're going to be, and just understand they do change. Every carrier is different. Things like ISO protection class is pretty standard, but some things like I said, distance to the coast, or even the way some of the people rate the hazards, that's proprietary based on companies. But like the flood zone is the flood zone. So you need to do business with a company that can actually provide that to you. So that's important. Moratorium process. What that means is now there's a tropical storm that has formed out in the Atlantic Ocean. When does the carrier suspend binding authority? I've seen that all over the place too. And then not only when do they suspend it, but then after the storm dissipates, when do they lift that binding authority? So stay very tuned into that. We get an awful lot of calls when the storm's just right off the coast and it's too late to bind the coverage. So let's don't do that, because then you're really taking the chance of a major uncovered claim. Deductibles. Once again, named storm deductibles, percentage deductibles, wind deductibles, full wind, flat deductibles. They're all over the place. Major difference between a named storm deductible and a full wind and hail deductible, being that a named storm deductible only applies when there is a named storm in a given area, distance from the risk. And I have seen that definition all over the place, so get that understanding. But a full wind and hail deductible would apply whether the storm is named or not. You have a severe thunderstorm that damages the building, full wind and hail would cover that. Named storm would not have that deductible apply. So named storm is a better deductible, by the way. So construction materials, once again, understanding. We went through our webinar last time and talked about frame, joisted masonry, non-combustible. So, they've done all the studies, and I think South Florida is a great example of less and less frame construction taking place in South Florida. They're even building masonry non-combustible single-family dwellings down there now. They're more expensive to build, but they do a lot better in the wind. So, just understanding, up and down the coast, though, I think the building codes are getting better all the time. Tie downs for the roofs and stuff. So, and I think our latest little storm that blew through the East Coast last year, Irma, showed that the building codes have gotten a lot better. Another thing too that storm taught us too. So, the carriers have learned a lot about mandatory wind deductibles. They've learned a lot about flood. So what they do now is, through the use of these deductibles and through the use of very accurate flood maps, is they don't write flood in areas that are flood prone, and they have the mandatory wind deductibles that take care of the partial losses. So the overall impact to the insurance industry of these catastrophic events has been minimized, or at least lowered. And that was a great example of that. So, but I would say as agents, you need to make sure that the insureds understand the ramifications of a percentage wind deductible. I mean, you can do the math. If you have a $25 million building and it has a 3% or a 5% wind deductible, you have a substantial deductible on that project. And that's okay, but just make sure they understand it. Because the insurer will say, I didn't understand that. You didn't explain it properly. So anyway, I get preaching a little bit about that. So that's kind of it in a nutshell, just touching on catastrophic events. Each one of these perils we could spend a lot of time on. But I would like to say really thank you today. I think we're going to open it up to some questions now. And so whatever you all want to talk about, let us know.
Jeff, the first question is, I recently saw a competitor form that had a 5% of values at risk deductible for wind. Do you think that is based on the total values of the project or the value of the structures they have in place at the moment of loss?
That's a good question, and I'll be the politician here, but I mean, you really would have to read the form. Usually, when it says values at risk, what that implies is what's put in place. So that's probably what it is, but I'd have to read the form. Some are based on the completed value of the structure, and some are only on the values at risk at the time of loss. We didn't touch on this, but some deductibles are per structure, some are per policy. So if you have multiple structures, there's only one deductible. It's kind of all over the place.
Next question is, how can you tell the distance from the coast? Does the agent have to map?
Well, I can speak for us that we will map it for you. So most carriers have the ability, because they're going to define the coast however they define it. And so if you give them the address, they'll tell you. So we map it, and we can do it latitude, longitude, down to very precise how far it is from the coast. So the carriers usually do that.
Next is, what is considered piling?
All right, so I'll give you our definition of pilings, because there is some floating foundations that are only a few feet off the ground. We don't consider those elevated or piling driven. We look at the ones where if you can drive a car into their house and there's and it's a full story of 10-foot pilings or more, we consider that an elevated structure and underwrite it accordingly. So that's just the way we look at it. But I would talk to the underwriter, make sure that what their understanding of it is.
Next is, are there specific areas of concern for high brush fire? And is there a way to map or review these locations?
Yes, and there is most of the carriers would have access to Risk Meter, CoreLogic, or something that actually gives high hazard areas. And like I said, calfire.com gives you a lot of information on their website. But I would approach, because you might have a carrier that has their own proprietary zones for brush fire, because it's not like flood, it's not like ISO protection class. It might vary based on carrier. So I would approach the carrier, and they will give you those zones, sometimes at a zip code level. Now, I will say this, and this is kind of the irony of brush fire, is once you have a brush fire that goes through an area, probably for the next 10 to 15 years, that area is very low hazard for brush fire because it's all been cleared out. So it does change year to year. But anyway, that happens.
Jeff, last question is, are you available in California?
Yes, yeah, we write business in California, and we do all the things we talked about today. California being the third largest state in the United States based on construction spending. And unfortunately, there was a lot of brush fires, so there's a lot of areas being rebuilt. I will say this, from a builder's risk perspective, when you have flooding and you have brush fires or you have catastrophic wind events, after the event dissipates and goes away, there's a lot of building that takes place. So markets like ours will step in and fill the void, and it's kind of a boon for us to do that. So hate to benefit from that, but that's somebody has to rebuild it. So, but yes, we are available in California. Is that it?
No, one more.
Oh, good.
Sorry. What earthquake deductibles are you seeing in New Madrid fault area for frame?
I would say in the New Madrid, and this is going to sound very, I'm not trying to dodge the question, but it literally is all over the place. You have some carriers that are very, very concerned about the New Madrid, and you have other carriers that say, it hasn't happened in hundreds of years, we're not worried about it. So it's kind of all over the place. There's a wide range. So it's worth having the discussion with your markets. Because literally I've talked to some markets that'll say, almost standard deductibles, and then others will have very high deductibles in that area. But it is interesting. We didn't really touch on construction type, but the reason you see a lot of frame in California is because for the most part, frame does better in an earthquake than superior construction. So if you're going to write business in California, you're going to see a lot of frame.
No more questions at this point.
Well, I really appreciate your time today, guys. And just to touch on this, if you have any questions, I'm available. My contact information is up there. So the next question. There we go. So there I am. What a picture. It's something to see. But Donna and I are available if you have any questions. And I would like to say we're in our series of webinars. We're going to do another one next month. We try to keep these to about this, 20, 30 minutes. Next month, we'll be on all the different policy formats, from monthly rates, monthly reporting, blanket policies, and various other things, more builders risk driven stuff. And we really appreciate your time this afternoon. Hopefully it was worth your while. And like I said, we are available at any time. You guys have a great day. Talk to you soon.